So the Fed just cut interest rate. No surprise there. I think a lot of people already knew that the Fed was set to cut the interest rates by at least 0.25%. But the Fed also did one other thing. And I think what they decided to do here is going to make a huge impact on mortgage rates going forward. And it can also make an impact on the real estate market across the country. So stick with me. I'll go ahead and explain what happened. And thank you again for joining RVM. My name is Harry. Let's go and see what the Fed had to say, or at least some of what they had to say today, this afternoon. From the Federal Reserve press release we see here, it says that the committee seeks to achieve its maximum employment and inflation at the rate of 2% over the long run. So this is why the Fed was really on the fence with regards to cutting interest rates, because they knew that there was a problem with inflation. But as we see, and as many people may know, especially with the government shutdown, but even before that, there were signs that the economy was slowing down. Unemployment rate was going up, or was ticking up quite a bit, but the government shutdown probably exacerbated that situation. So the feds are putting their eye on the ball and making sure that inflation doesn't run away and that it remains low. But they did say the uncertainty about the economic outlook remains elevated. Next, what they said here is that in support of its goals and in light of the shift in the balance of risks, the committee decided to lower the target range for the federal funds rate by 0.25 percentage point to 3.25 to 4%. So again, no surprise there. I think even Polymarket had it very high. A lot of analysts already knew that this was going to happen. The Fed just cut rate by 0.25%. We're down now to 3.25 and 4%. That's good news. But the Feds also decided they're going to do something else. What the Feds are deciding to do now is going to make a direct impact on especially the 10-year yield, the 10-year Treasury yield. And the reason why that matters, of course, if you've been watching any of my videos, you'll know that the mortgage rates basically follow the 10-year Treasury yield. Let's go into what was it that the Feds also decided to do and what they talked about in this meeting here. Federal Reserve has said it will halt its effort to shrink its balance sheet in December as it cuts interest rates by 0.25 point in a bid to ease borrowing conditions amid concerns about the U.S. labor market. If you recall, basically there was quantitative easing being done, and as a result, it kind of inflated the debt, and the Feds were essentially becoming the largest purchaser of U.S. Treasuries. Okay. And so what it wanted to do was shrink that ledger, if you will, right? Just start getting those Treasury off its books. But now what they're going to do is they're going to reverse course. Now they're looking to actually start going in a different direction and get back to purchasing those Treasury. If they do go ahead with this, what that's going to do is, of course, is going to put pressure on the price of these Treasuries. And because the price of Treasuries move inversely with the yield, that means that as demand for Treasury goes up, prices go up, and then the yield moves down. The 10-year yield moves down. The mortgage rates move along with it. And that's where mortgage rates will begin to drop. And that's one of the reasons why some of the analysts also said because of that move, we may see mortgage rate begin to drop even further. So they did signal that that would happen. And as a result of that, those are some of the things to look for, right? We kind of had two, somewhat good news, right? The Fed cutting rates, the Fed reversing course on their balance sheet, and now beginning to take on those Treasuries. But there is a little bit of a bad news that also came out of the meeting, and that is there may not be a December cut. We don't know for sure, but in this meeting, the Fed board was pretty much split on what they wanted to do. So it goes on to say that the Fed also signaled that further rate cuts this year were not a foregone conclusion, and Wednesday's decision also divided the 12-member Federal Open Market Committee. We don't know what's going to happen at the end of the year. Again, before this meeting, most analysts had it at least 2 rate cuts by the end of the year. Now this may be the last rate cut, but we won't know that. In December, as far as Fed Chairman Powell said, December rate cuts no longer a foregone conclusion. They no longer know if that's going to be the case. So until then, we're kind of crossing our fingers, if you will, and seeing if that will be the case. But we do have some things that are in the works, right? Some things that are happening. We do know that Fed Chairman Powell is on his way out. There are talks among the administration right now to replace him with another Fed chair. If that's the case, I'm pretty sure that President Trump is probably going to put a new Fed chair that's more aligned with his views on the direction of the Federal Reserve. And that direction might be, of course, more along the lines of cutting those rates, perhaps even taking on more treasuries in order to reduce the mortgage rates over time. Let me just also show you again, the 30-year fixed rates do follow the 10-year rates. And the latest numbers, of course, we are at about just over 4% on those 10-year yields. You can see the mortgage rates tracking with the 10-year yield. And then you have the Fed cuts. Now, the Fed cuts, mortgage rates don't usually move with Fed cuts, okay? But there are some similarities in the way they pattern each other over here. Biggest takeaway here is the Fed cut rates. December is not a done deal, or is not a sure thing. We don't know if that's going to happen yet. The Feds did decide to reverse course on its balance sheet and take on treasuries, which will put pressure on treasuries and bring those yields down theoretically, but that's what usually happens. And if that's the case, we could see mortgage rates moving further down as the weeks go by. So what does that mean for the real estate market? Well, of course, if mortgage rates go down, then there's going to be more refinancing, more home equity line of credits, more purchases, more buying and selling. Also, if the Fed rates being cut, that's also going to ease up on loans as well, on other loans, especially construction loans, right? So we may see some more buildings. We may see supplies of construction or construction supplies go up as well, and you'll see more building happening. That's it for now. Being day 29 on the government shutdown, we don't know what the effects are, right? The Feds kind of flew blind in making these rate cuts and also reversing costs on his balance sheet. It doesn't have all the numbers, doesn't have the full picture. If the government shutdown continue to happen, then they may go blind even into December, depending on how long this goes. Some people are thinking that government shutdown can happen up until possibly closer to Thanksgiving. I hope not. There are a lot of people that unfortunately are furloughed and out of work. If you've seen any of my last videos, we see that there are a lot of activity happening there in terms of real estate, people trying to just get rid of their homes and move out, or the impact that's making on housing supply around the Washington, D.C. area. But with that being said, thank you again for joining RVM. I'll see you in the next video.